Hey everybody, Jay here. Welcome to the channel. Using today's video to share with you guys how I look at and how I think about compound annual growth rate for my dividend income and how I use that as a tool to project ahead to see how much income I can expect off dividends in my portfolio in the future moving forward. So I'm going to give you guys just a little peek into that. With the hope being that you'll be able to use that for your portfolio. I use my portfolio as an example because it's very personal to me, but my ultimate goal with this channel is not that you'll invest just like me, because I'm definitely not the best investor out there when it comes to picking stocks. I'm not a financial advisor, but I'm someone who's on a journey to get my passive income to a certain level, and I'm hoping by sharing my journey with you on YouTube that you can gain some insights to help you forge your way to achieve whatever financial goals you may hold for yourself as well. So before I jump into the CAGR, I wanted to take a quick look at the market and how my portfolio did today. Pretty rough day for the S&P 500. It was its worst day, one-day performance since October. And take a look at my portfolio here. I'm down over $8,000. And that's not even having reconciled my mutual funds yet. This is just the individual stock performance. So it's probably going to be well over a $9,000 loss today, maybe even pushing $10,000 once we reconcile the mutual funds into this amount as well. But I'm not worried about it. The market's been on a tear, and I'm holding this portfolio for essentially forever. And then my ultimate goal is I don't want to touch the nest egg. I don't want to touch the money that is the foundation, but I do want to get to the point in my life where the dividends and the income that this portfolio is generating, that then I can use that money to live off of. I'm not there yet, so what I'm doing is I'm reinvesting my dividends so that I can ultimately build that nest egg up with the power of compounding interest. But until that happens, I'm not touching any of this stuff anyway. So I'm not really worried about a significant one-day drop in my portfolio. I'm fully prepared to take a much deeper hit than what we had today throughout the year. And I'm actually going to do a couple future videos on how I'm thinking about it. But I just wanted to kick the video off today by showing that, hey, we all lost some money in the market today, and I am definitely not excluded. So with that being said, let's jump into the portfolio. So today I'm talking about CAGR. And specifically what that is that's the compound annual growth rate for dividends that the stocks are paying. So here's my portfolio. I'll walk you guys through kind of how I looked at this. But overall, you can kind of see essentially what I did here was I took all of my dividend paying stocks and I calculated a weighted average compound annual growth rate for all of the stocks that I'm holding that are currently paying dividends. And so you can see it varies, holding by holding. For example, Wells Fargo here is right at 8.2%. AbbVie was one of the stronger ones at 23.26%. Bank of America at 38.2%. But then you have someone like Verizon who's down here at 2.15%. You have AT&T at 2.04%. Realty Income Corp at 4.18%. So there's quite a range. And so at the end of the day, when I take a weighted average of the 3-year CAGRs for all of my dividend paying equities, what I get is a 7.5% CAGR. So that's essentially saying that based on these estimates, I can make a reasonable assumption, obvious assumption with some margin of error, that I can count on my overall dividend paying portfolio to have the dividend payout rate increased by 7.5% per year. And the way I figured that was pretty simple. You just go to Seeking Alpha, and what you do is I have 3M up here for example. But for example, for those of you that are familiar with Seeking Alpha, you can come here to the home page on any stock or any mutual fund. You can go to dividends right here, and then if you go to dividend growth, it'll give you the 1-year growth rate, the 3-year growth rate, 5-year growth rate, and 10-year growth rate, as well as the number of years of growth, and it'll graph it out for you right here. I like to use the 3-year growth rate just because I think it's a happy medium between 1 and 5, And so that's what I chose to use for this exercise. One quick note, I did exclude my mutual fund, BRLIX, from the overall holdings, because if you look at their growth rates, it's really funky. Down 75% this year, up 61% over 3-year average, etc. And then I also did not include the VFZILX because they are not, this is such a new index fund that they're not reporting growth rates yet either. So I didn't figure either one of those two into my calculations in terms of figuring out the growth rate. And here you can see what happens when you take that weighted average CAGR, that 7.5% annual average growth rate in the dividend payout, and you apply that to my current yield in my dividend equities, which is 3.27%. And then what you do if you then run that over the next 10 years. So what I have here, this is the total amount that I'm holding right now in just dividend paying equity. So this is not including my Facebook, my Google, my Amazon, my Zoom stock, etc. It's not including my real estate holdings. This is just all the stocks that I'm holding right now that are paying dividends. This is the annual dividend income that I'm getting. It's actually dropped a little bit from my last video because the holdings took a bit of a hit today, but you can see my overall yield is 3.27%. So what I mapped out here is if you take that 7.5%, you apply it to 3.27%, just based on the projected dividend increases based on what my dividend paying stocks have done over the last 3 years in increasing dividends. My overall yield on equities is projected to increase from 3.27% up to 3.52% next year. So then what that means is, let's assume here, all I assumed here was I took my dividend equities and I assumed I reinvested all of my dividends. So then I would be holding $663,000 in those equities next year. I'm not assuming any capital appreciation. I'm not assuming any capital depreciation, which is also very possible. Just to keep it simple, I'm literally just every year assuming I'm reinvesting my dividends, and then that's what's growing my overall pie up here. And then I'm also assuming a 7.5% increase on the dividend payout rate over the next 10 years. And this gives you a really nice illustration of compounding interest. You guys, I'm sure, have all heard of the rule of 72, where a number is going to double based on the interest rate, that if you divide 72 by that number of the interest rate, that's how many years it will take your principal or anything else to double. Well, the same thing applies to the yield on dividends as well. At 7.5%, it's going to take a little over 10 years for my overall rate to double, or a little under 10 years. So you can kind of see how after 10 years, my yield on equities has gone from 3.27% up to 6.74%, assuming this 7.5% CAGR year over year. So what's really interesting, I think you guys know that I have an ultimate goal to be generating $150,000 in passive income from my holdings. That's across everything, real estate, stocks, etc. Well, if I would just have a 7.5% increase on the payout rate of my dividend paying equities, and then just hold that money over the next 10 years, that's not adding another cent to the portfolio, that's only reinvesting my dividends, you can see I'm going to be a little under halfway there, be generating $68,000 a year in annual income. But then that got me thinking, and kind of what really had me thinking about this exercise is do I need to be a little bit more aggressive looking for stocks with better projected CAGRs, compound annual growth rates? Because check this out. I did a little exercise where let's just assume I'm going to unhide these rows. Let's just assume a 10% better growth rate. If I was able to increase the CAGR of my dividend paying equities from 7.5% up to 8.26%, look at what this does. This brings me up to literally half of my goal within 10 years. And again, that's without putting another dollar into principal. So instead of generating $68,000 a year in passive income, this portfolio would be generating a little over $74,000 a year at a 7.23% growth rate. So again, I did a little chart here to kind of show just kind of like the power. You can kind of see how quickly this really starts to hockey stick upward. So again, that's just a basic little 101 on compound annual growth rates. I hope you guys enjoyed this video. If you like these videos, please subscribe, and thanks for watching. I appreciate it very much. Bye-bye.